Hi everyone. Welcome back to yet another Power Pack content in your channel, Domain Consulting. If you have been following us for the last few videos, you would have seen that currently we are in our general insurance journey, where we have covered videos around auto insurance, inland marine insurance, ocean marine insurance, so on and so forth. Before general insurance, we covered the different types of life insurance in few of our previous videos. So currently in today's video, we would look at what is property insurance and what are the different types of it. So without any ado, we'll directly deep dive into the topic. So as you see, property insurance covers the protection or the coverage against the property that you own, as well as any liability that arises from the property. That's in simple terms what property insurance is all about. As you're seeing the different types of property insurance, the most important type is homeowners insurance. We'll deep dive into the details in a quick 5 minutes. So the first type is homeowners insurance. The second one is renters insurance. Then we will look at flood insurance, earthquake insurance, followed by commercial property insurance and public liability insurance. Before we start off with the different types, we would look at what are the different types of coverages of property insurance that are there in the market. The first type being replacement cost. The second one is actual cash value, and the third one is extended replacement cost. So what does these things mean? So replacement cost means that say today an incident has happened in your property and you have claimed for an insurance from the insurance company, right? Now, say for example, your property is 10 years old. Now an incident has happened, a fire has broken and it has damaged, say 2 ACs, right? And you have to replace the 2 ACs, right? And you have claimed for it. What the insurance company will do is to replace the 2 ACs now, you have to buy 2 new ACs, right? And the cost of 2 new ACs, say for example, 40,000 each, total 80,000. So in that case, the insurance company have to pay you 80,000. You go ahead in the market and buy the 2 ACs and then you replace it, right? And you are done. So if your policy says that you will get the replacement cost if you do a claim, then your policy covers replacement cost, right? Vis-a-vis, if it is an actual cash value. What does that mean? That means that say for example, you bought the 2 ACs 10 years back. And at that point of time, each of the ACs were 30,000 each, right? So total cost would have been 60,000. If by claiming this incident, if you get 60,000 from the insurance company, that means you are getting the price of the ACs at its actual cash value and not at its present value. So if your policy covers actual cash value, so in that case, you will get the coverage based on the actual cost in which the AC was bought, right? So that is the main difference between replacement cost coverage versus actual cash value coverage. So obviously your replacement cost coverage will fetch you more premium because it's giving you a better coverage, right? There's a third type of coverage, which is extended replacement cost, which says that anything over and above the replacement cost, if you need to, account for it, in that case, you go for this kind of coverage, although this kind of a coverage has a typical upper limit of 25% of the amount that you will get, right? So that's the ceiling or the upper limit. Now we will start looking into what are different types of property insurance we would look at. The first and most important being homeowners insurance. So if you own a home, you need to have a homeowners insurance, plain and simple. But what all does it cover? It covers physical structure of the home, any personal belongings that you have within the home, any liability that comes to you for any incident that happens in your home, and then any additional living expenses that you may accrue, right? So say for example, so you need to repair your home and you along with your family need to stay in some other hotel for about 7 days, right? So any additional expenses that occurs because of that, that falls under additional living expenses, and you can also claim for that to your insurance company. What all a homeowner's insurance does not cover, right? Any intentional damage. So you break your wall and then you go to insurance company and say, see, I need a payment for this. It won't be approved. Then normal wear and tear, right? So we see that over a period of time, your say the paint in your wall or the other fittings and stuff like that have a normal wear and tear. You can't claim for that under your homeowner's insurance. Any infestation that happens because of worms and insects, you can't claim for it. And we would also see that any natural calamities like flood, earthquake, hurricane, etc. are not covered within your standard homeowners insurance. Now we will come to a little tips and tricks, right? So what all things you can do to lower your premium of your homeowners insurance. You can always install alarm systems so that you are alarmed well ahead of time before any incident happens or before any incident takes a very serious turn. You can install smoke detectors so that you can easily understand if any fire is going to come, and then you can take actions appropriately ahead of time. You can automatically have fire sprinkler systems available in your system, which will automatically start sprinkling water in case the temperature of your room goes above say 60 degree or 70 degree centigrade, or in case a fire has broken out. And what you should also do, which we often forget to do or miss out, is we should disinfest our homes every 1 year or every once in 2 years kind of a thing, so that nothing happens to our home. So if you do all these things, what at the end of the day will happen is your premium of homeowners insurance will come down drastically, and it will help you. So when we talk about homeowners insurance, the standard homeowners insurance which most of us buy is HO3 policy, right? So we have different kinds of policies starting from HO1, HO2 and things like that, but those are very basic. The standard one, which covers your entire property and the property within the premises of your overall property, that is called HO3 policy, and it also covers your the items that you have within the home, although it normally have a higher limit to the premium items like gold, wedding rings, jewelry items, and so on and so forth, right? And what HO3 does not provide you is any accidental breakage or damage coverage, right? So these are some of the things which HO3 do not cover or have a limitation in terms of coverage. If you want to go for a comprehensive homeowners insurance, you should go for a HO5 policy, right? Which will cover you the replacement cost as well. So that way we understand that HO3 has is the basic or the standard homeowners insurance, but it has certain limitations in terms of covering accidental breakage or damages, which HO5 also covers, and it also covers all sorts of valuable things that you may have within your home. Now coming from homeowners insurance to renters insurance, which is also known as HO4 insurance. So say for example, you have taken a rent in somebody's place, and then you have landed up in some kind of a liability because of some incident, right? So what may happen is that the owner of the or the landlord of the home can charge you for a certain amount of money suddenly, right? So at this instance, if you don't have a renter's insurance, you have to pay the money out of pocket. But if you have a renter's insurance, you can claim for it, and the insurance company will pay that to the landlord on your behalf. Now we will come to earthquake insurance. Pretty straightforward, right? I mean, so from the name suggests that the insurance that you need to have in case any incident happens and damages your home is earthquake insurance. The important thing to note here rather is that there are two types of earthquake insurance, right? The first one is traditional earthquake insurance, which means that based on the calamity and based on the seriousness of the calamity, the amount of damage that it does to your home, based on that you can claim the insurance company and get the amount, right, if it is covered within the overall coverage that you have in your policy. But the newer form of earthquake insurance is parametric insurance. What is parametric insurance? So it means that, so say for example, the Richter scale, it is defined on the kind of a Richter scale of the earthquake that has taken place, right? And it doesn't depend on the amount of impact it has done on your individual home. So I'll take an example. Say in a region there are two buildings side by side, and then so an earthquake has happened in Richter scale 6.5. Now, but somehow because of the construction of the two buildings, the impact on building 1 is different from the impact on building 2. Say the impact in building 1 is much higher than the impact on building 2 that has happened, right? But because the Richter scale of the earthquake was same, So both, if I am a person from building 1, I've taken a earthquake insurance, and somebody else is a person from building 2, and he or she has taken a earthquake insurance. Both of them will get the same amount, once they claim for earthquake insurance, because the Richter scale of earthquake that has occurred in that region is the same for both the buildings. So that is the difference. Even if the impact is different, even if your loss amount is different, but because it's a parametric insurance, both of you will get the same amount of money as coverage out of the earthquake insurance that you have. So that's the difference. You can go for a traditional earthquake insurance if you feel that's more meaningful for you, or otherwise you can go for a parametric insurance. Now we will look at another type of homeowners insurance, which is HO8 policy. We have already seen what is a HO3, HO5 and HO4. So this is a HO8 policy, right? So this is less frequently used. This is only meant for homes which are pretty old, right? 40 years, 50 years old. So for those kind of homes, if you want to cover the property, you go for a HO8 policy. And typically buildings like museums, which are architecturally significant buildings and stuff like that, so owners of these kind of buildings go for HO8 policy. But you have to keep in mind that the payout in terms of the actual cash value for these kind of policies are really less, because the buildings are really old and there's a high chance of anything happening in those buildings. So the coverage is not that high you get when you have a HO8 policy. The next type of homeowners insurance we'll see is HO6 policy, right? This is a very niche and a specific type of property insurance, which is only for condo owners, right? So if you don't know what is a condo, this is basically a shared space that is rented out, and typically 2 or more people stay together in that place. And so that kind of an arrangement is called a condo. And if you're a condo owner and if you want to cover any incident that happens in your property within the structure of your condo, you will go for a HO6 policy. That leaves us to the last two insurance that we will see today, and the second last being the commercial property insurance, right? So if you own a commercial property, your homeowner insurance won't do, right? If you have to separately own a commercial property insurance, which will cover you from any kind of incident or any kind of natural calamity that has happened in your property, right? In your commercial property. It can be a man-made incident, it can be a natural calamity, but all those things will be covered. But what it won't cover, and you need a separate policy for it, is liability, right? So public liability property insurance, what it does is, so it says that it gives you the coverage against the damages that a third party incurs in one's property, right? So if you want to cover any damage that is caused by a third party, so say for example somebody else is building a home beside your home, right? And that person has bought a crane to do some work in his or her home, and that crane somehow accidentally falls on your property and damages your property. So in this kind of a scenario, if you have public liability property insurance, you will get covered. You can claim it from the insurance company and you will get the coverage amount for that. But if you have a commercial property insurance, that covers only your commercial property, that does not cover any liability in that scenario. So that's the basic difference, and you need to accordingly have the insurances to get the right coverages. I hope I could make myself clear. So today we looked at public liability property insurance. We looked at commercial property insurance. We went through the different types of homeowners insurance: HO3, HO5, HO4, HO8 and HO6. So these are the different 5 types of homeowners insurance we looked at. We looked at what are the different types of earthquake insurance we have today. The first one being the traditional earthquake, the second one being parametric insurance. And we looked at what are the different types of coverages that we have in terms of property insurance. So we looked at what is a replacement cost versus actual cash value, and also what is the extended replacement cost. So these are the 3 types of coverages that we have, right? So I hope you enjoyed this video around property insurance. We will cover other types of general insurance in our upcoming video. If you are liking our series, request you to kindly subscribe to my channel. Thank you for your time. We will meet in the next one.